Hello and welcome, students. My name is Alex. I'm an economist and a financial consultant. I will work with you through our trading school webinars. Our topic today is our main source of activity, our target and aim, how to make money. In order to talk about it, you will need special terms and definition, and you will learn all the terms you need to become a trader. By the end of this lesson, you will learn who is a trader, his aims, what is financial market, why and how we choose it, the types of market, how does the financial market work, and some other important issues regarding trading. Next slide, please. This slide shows a trader. It's a person who enables to transfer financial funds in financial markets. He can do it on behalf of himself or on behalf of other individuals. It is easy to understand. Suppose you have some spare money and you would like to raise them. A good decision would be to invest your money in financial market. How to do it best way? This is a task for a trader to find a way to multiply your assets and make profit for you. Next slide. Why do we talk about investing your money into financial markets? What is financial market first? A financial market is a market in which people and entities can trade financial instruments, securities, commodities, and other items of value at low transaction cost and at prices that reflect supply and demand. You can find financial markets almost everywhere in the world. They can be both small ones with a few participants or huge and impressive like New York Stock Exchange or Forex market, which can trade trillions of dollars per day. They may be a physical location like Boston Stock Exchange or an electronic system like Nasdaq. Financial markets exist to assist the process of interaction and cooperation between providers of capital, such as savers and investors, and users of capital, for example, companies and government institutions. Financial markets' aim is to assist bargains and deals with mutual shared profit for both parties. It has been designed to do business without difficulties and obstacles. Investors can use this large number of instruments in the financial markets. So what types of financial markets exist? This slide shows types of financial market, and first is capital market. It's a market busy issuing, buying and selling long-term debt or equity-backed securities that can be divided in stock market and bond market. Then it is money market. It's a component of financial markets for assets involved in short-term borrowing, lending, buying, and selling with original maturities of 1 year or less. Many instruments exist in this market, such as treasury bills, commercial papers, bankers' acceptances, deposits, certificates of deposits, purchase agreements, federal funds, and other asset-backed securities. For many investors, volatile market like capital market is just too much to swallow. That's why they turn to an alternative. Money markets can be a lower risk and it can be used for risk management. Next is derivatives market. It's a market for the derivatives, financial instruments which are derived from other forms of assets. For example, future contract is a contract in which you agree on buying or selling an asset, but delivery and you pay for the asset in the future. Derivatives market is very hard to manipulate and speculate, so it is not suitable for an experienced trader. However, it can be used effectively as part of a risk management program. Cash market or spot market is opposed to derivatives market. In this market, settlement is due immediately. The settlement happens maybe in 2 days after purchase, and this market is occupied by so-called institutional players, large hedge funds, limited partnerships, and corporate investors. The very nature of this market requires access to far-reaching, detailed information and high level of macroeconomic analysis and good trading skills. And Forex exchange market or interbank market, one of the largest, most exciting, fast-paced market in the world. It is very large. It can trade trillions of dollars per day. Chances are that you already tried it when you've gone for a trip to another country and exchanged some money. Historically, only large corporations, central banks, hedge funds, and extremely wealthy individuals had a chance to participate in foreign exchange. And it was called interbank because only international banks could afford to use it. Now, Forex market serves two goals, and with popularization of computing and internet, every individual can access this market from the comfort of his home. First goal of Forex market is enabling international trading. For example, it permits a business from the United States to buy goods from the European Union. And if an importer wants to buy something from Europe, he should pay the price in euros. And the United States buyer pays price in US dollars. So now you can buy whatever you want from almost every country in the world using Forex market. And the second goal of Forex market is enabling direct speculation based on the value of currencies. Why do we choose Forex market? Because of its huge volume, representing a large asset class in the world and leading to high liquidity. Also, unlike stock market, in which one buyer or seller can move the stock price significantly, in Forex market, sheer size of this market prevents one player from moving the price. And currency prices are largely based on supply and demand. Then, it's a variety of factors that affect exchange rates. They can be mostly macroeconomic, like inflation, GDP, indexes, and they can be subjective, like geopolitical events and so on. Then it's geographical dispersion, and which leads to continuous operation. Forex market, as you can see from the next slide, works 24 hours a day. It starts to trade at 10 p.m. GMT on Sydney, an Asian session comes in, then European session turns on, and North American session closes the market when the Asian session starts. And as you can see from the table, sometimes working market hours overlap, which make the market even more volatile, which is good for the trader. Next slide. Now we see a very important thing. It is MetaTrader 4, a platform, and basically a program. Here in the middle you see a diagram of Australian dollar to Japanese yen over a period of 1 hour. On the bottom of the graph you see indexes of balance, the funds, available margin, and other stuff we will discuss later on. So let's go back to our first question, how to make money. Here we see the currency exchange in the morning. The currency exchange rate is a rate at which one currency can be expressed in another. It is always quoted in pairs, like here we see euro over US dollar. exchange rates, as I said, are based on economical factors. And here we see two prices. Ask price is price at which you buy the currency, and bid price is price at which you sell the currency. The difference between bid ask and bid price and ask price is called the spread. In this case, you see that the spread is 3/10,000 of a unit. So it is called pips or points. So 1/10,000 of 1 is 1 pip in this pair. Then imagine that you know, but by the end of the day, the euro will raise against US dollar. A good decision would be to buy euros, and let's suppose you buy 100,000 euros in the morning, and then by the end of the day, the euro rises, and you sell your 100,000 euros back. So as you can see from the slide, you can calculate that your profit will be $1,350. But you don't need that large amount of money showed you as an example, because you can use the leverage. Later I will explain you that you can buy that amount of currency with 100 times smaller amount of money. Okay, but what if you made a wrong decision? What if you decided that euro will decrease in value? Then your profit will be your loss. You should know that forex market can be both beneficial and harmful for you too. But how do you know that the exchange rate, what the exchange rate will be? Can you forecast the price? Later in our lesson, I will show you that you can predict currency prices, exchange rate with some certainty, and you can make money on that. Thank you everybody for watching. See you on the next lesson. Bye.